and Eris Life Sciences. We've taken note of both of that. Well, let's move on then. We have Vaibhav Sanghavi, the co-CEO, United Avendus Capital Alternate Strategies, who joins us. Hi, Vaibhav. Thanks so much for joining in. Vaibhav, the last time we chatted, I recall you saying that the Nifty has got the momentum. Though at those levels, at around that 17,700 odd, you were saying you're a little bit cautious because the run-up was too steep. We did correct it, close to around 800-900 points odd. At what level would you turn constructive on the Nifty itself? What are the levels you're looking at basically on the Nifty? Do you think we can, see a correction from here, or do you think we're trending higher? Fresh all-time highs are in the offing.
Sure. So, hi, Nigel. I think the view which we have currently is basically that, yes, of course, we are seeing that correction kind of happen from about 17,700 or 800 levels. What we need to, keep an extra focus on is basically the events rather than the levels. Why I'm saying this is basically that in this quarterly earnings, when it comes about, especially in the US and in the other parts of the globe, we will see that the corporates kind of try and reduce their guidance. At the same time, analyst forecast also will be kind of trimmed down, purely because to take into construct that the global growth is kind of likely to slip down at a much faster pace. Now, when that kind of happens, you may see further round of probably profit booking on the global side. So in that terms, probably at least for the next 2 months is where we do think that the volatility will continue, right? And of course, the rapid pace of your interest rates increase will always be prone to some or other accidents, which may probably happen in the global scheme of things. So we need to be aware of those kind of risk factors. Not saying that the domestic quarterly earnings are going to be bad. I think domestic quarterly earnings are going to be pretty good. But from a global perspective, we may continue to see that risk off flows kind of starting to happen once this upward correction kind of gets over.
Well, talking about the domestic earnings calendar, it's going to be all about IT next week when heavyweights like TCS, Infy, HCL Tech, Wipro and midcaps like Mindtree and Cyient report their numbers next week. I think we could just pull up that calendar, the IT earnings calendar, and then you will get the names and the dates along with it. But what are we going to watch beyond the numbers? One, up until now, the management commentary has been fairly positive. But since then, the macros in US and Europe have started to deteriorate. So will the positive management commentary hold even as the macros continue to deteriorate? And globally, clients have turned fairly cautious. So annual budgets for this year have remained intact. But what about for next year? Is there a risk that calendar year 2023, client budgets are cut, tech budgets have been brought down? That's a fear that the market has. Also, so far, the only two verticals which the companies have called out as red flags, one is mortgage business in the US due to rising interest rates, and the other one is retail, which has been hit by inflation. But are there any other verticals where we are seeing some signs of slowdown or weakness? UK and Europe roughly contributes about 25 to 30% of IT, large cap IT companies' earnings and revenues. Is there a risk of slowdown over there? Developments like Credit Suisse and what is happening impacts the BFSI sector. So commentary on BFSI is going to be watched very crucial. The street was banking on price increases, but now that clients are getting hit due to inflation and slowing demand, are they going to push back against a possible price increase? Are they going to resist a price increase that IT companies want to take? And finally, as the pressures on profitability continue to remain elevated or even mount, will the IT companies resort to deferring the fresher hiring? And there are a lot of reports that IT companies are slowing down on their fresher hiring. Despite giving an offer letter to employees, they're not upholding it. There is talk about how variable pay has also been cut. So the street is going to be watching the commentary on the supply side very closely, apart from, of course, the attrition number. But Vaibhav, you wanted? Yeah.
No. I mean, I think Nimesh is also with us. So I think we'll just go to Vaibhav in just a bit. Vaibhav on IT, and Rima, of course, is going to be living in office starting 10th, right, Rima? Yes. 9th to 10th for 20 days from the 10th. But Nimesh is standing by as always with what he's picking up from dealing rooms, and this is D Street Chatter as always. Nimesh, hi, over to you.
Hi, Prashant. So, a sharp pullback for Indian equities and largely on back of global risk on. So that's helping the Indian markets as well. And the heavy lifting today is largely done by the financial stocks. So the bank Nifty bank is up almost 3%. And it's not only a short covering rally, but there is a bit of genuine buying as well, is what I understand, in the financial sector stocks today. So that's clearly playing out in the financial names. Of course, it's a weekly expiry as well, so that's also playing out in the Nifty Bank. While the flows are still muted, that was the case yesterday as well. Even today, the flows are slightly muted because there is a bit of truncated bit across Asia, and that's the case going to be in India as well. But for a change today, there is a bit of buying as well. So not only it's a short covering in the financial names, but outside financials as well. I believe there is a bit of buying back, not only from the FIs, but from the domestic funds as well. Having said that, we are pretty much now close to the upper end of the Nifty range between 16,800 to 17,300. I guess above 17,300, you'll probably see further short covering rally in the Indian market. So that's something to watch out for. But clearly, from a flow point of view, there is leadership now from back in the financials and a bit of buying as well from the larger FIs.
All right, Nimesh, that's about dealing room check. But what about individual stocks? What are you picking up?
Hi Nigel, so in terms of individual names, the first stock is United Spirits. As I said, there is buying interest back outside of financials as well, and United Spirits stands out purely on back of strong buy flow. So that's one stock which is buzzing on large volumes, on some bit of interest back at the FID. So that's the first one. The second stock is Bajaj Finance. Again, it's part of my charter list. That's one stock which is consistently seeing good amount of buying traction from the larger FIs. Most likely the quarterly update will come today evening, so that's expected to be quite strong for Bajaj Finance in Q2, and hence a bit of move in that stock. So the second one. The third stock is Fortis Healthcare. After a long time, ever since the disappointment from the Supreme Court hearing, for the first time I'm getting a sense that maybe at these levels some bit of interest is back. So some large funds are looking to bid for Fortis Healthcare at few FIDs. So that's a bit of interest back in Fortis Healthcare. And the last stock is Godrej Properties. That's one stock which has relatively underperformed the real estate pack. Seems like some bit of interest is back, not only from the larger HNIs, but for if you look at the disclosure data, for the last couple of days, Godrej property promoters have started buying at these levels. So maybe that's the reason why some bit of interest is back within the HNI community. So even Godrej Properties is well bid by the larger HNIs today, and hence a bit of up move in that stock as well.
All right, Nimesh, thank you very much for that. That's what Nimesh is picking up from his conversations out there. Interesting list as always. Vaibhav, of course, is still with us. Vaibhav, thanks for waiting. Rima outlined that picture on IT services. Are you inclined to dip your feet there? Do you already own names, or will you want to?
I think, Prashant, we've spoken about this last time in the sense that, when in an environment where the global growth is kind of getting downgraded in terms of the forecast, and global companies are on the path to kind of, better the profitability by cutting costs. In that environment, when there is a potential curtailing of the discretionary spend on IT, your revenue is going to be or likely to be under a good amount of pressure going forward, at least for a 1 year perspective. Now, we've already seen that the margins are kind of weakish, and probably going forward as well as kind of price negotiations come into effect, you might continue to see some amount of pressures there as well. So at this point in time, while it is corrected from the highs, we are still not very, very constructive at these levels. Of course, rupee is a tailwind, but on a cross-currency basis, you may have some headwinds from the euro side as well. So it's pretty complicated. We'll wait for the commentary to come about, especially on the quarterly numbers, which we expect that there would be some amount of toning down, especially on the revenue side.
Vaibhav, thank you very much for joining in, and have a good holiday tomorrow. Season's greetings to you. On the subject of Godrej Property, just take a look at the Mumbai registrations, right? Despite Shraddh period falling in the month of September, despite rising mortgage rates, on a month-on-month basis, the Mumbai registrations went up by another 1%, right? So it continues to remain rock solid, and the month of September is the best September in more than a decade. So they're just...
This is month
on month. I'm saying month on month, despite mortgages, continuing to go up, despite the Shraddh season, despite monsoon, on a month-on-month basis, registrations for Mumbai real estate continue to remain at very elevated levels, and they continue to rise. So that bodes well for names like Godrej Properties, something that Nimesh was earlier talking about, where HNIs too have been lapping up the stocks, but even others like Macrotech Developers, Oberoi Realty, Suntech Realty, these are some of the listed Mumbai real estate players. Get into a break. On the other side, we'll get you a check on more on the markets, and we'll also tell you what to buy today and sell tomorrow.